And welcome to another Friday. Welcome to Friday, October 8th, 2021. This is your pre-market rundown brought to you by TriggerCharts. You can visit TriggerCharts at TriggerCharts.com. And, of course, over on the TradeStation Trading App Store, where all the indicators that we talk about today and many more that maybe we don't touch on are available. So here we are. A couple things to note before we begin, as we do each and every Friday. First of all, you can get and see and revisit the discussion that we have here on the replays over on TriggerCharts.com, as well as our YouTube video channel, so check those all out. In addition to that, I have to mention before we begin that investing, of course, involves substantial risk. Please consider this for educational purposes only. The information we discuss is not a guarantee of past performance, is not a guarantee of future results. And, of course, a loss of principal and your original capital may occur if you are investing, and always use your best judgment when you are investing. So with that, and as you were looking at that disclaimer and the importance there, let's kind of take a look at where we are this morning. So it is a big day. It's a Jobs Friday where we see the unemployment rate and how many new people were added or taken out of the jobs market. Right now, the future is looking kind of like you would expect on a weak jobs number right now, as many of the investors out there are being trained and have been working the bond angle. In other words, yields have been really a big component of directionality for the markets. And right now we saw, as we had a sub 200,000 new addition, expecting 500,000 new jobs added. Overall, a pretty bleak and weak report. The fact is that this gives the discussion about, wow, well, maybe what we'll have here is the Fed in the environment of lower interest rates for longer and even longer, and maybe they'll even postpone the taper right now. So it keeps the Fed in play. Fact of the matter is that the Fed is always going to be in play. They don't know how to get themselves out of this. So don't be too surprised if we have interest rates until your grandchildren are your age right now. Seriously, it is a situation right now that looks to me as if there's just really no way out. And we saw that with Japan over the last 2-3 decades. But right now, we do see the futures up on the YM. They've been vacillating between plus and minus, and the SPOOs, or the ES, is up a bit as well. And we are seeing that the NASDAQ taking the lead as the most sensitive right now at the moment to rates. Now, what's also interesting is you'll see that we have something that's going on as well here. And what we have going on right now is basically that finally, I guess we could say finally, we're starting to see that gold's moving up. Now, Bitcoin's been on fire, right? I mean, Bitcoin, look at that number right there, 54.7. It topped out at about 55 last night. Ethereum, Litecoin, these major players are doing pretty well in the market. But gold and silver has been just disastrous, just horrible. So right now, it is good that we're seeing that move up in terms of some realization that, maybe the inflation is going to persist for longer as interest rates hold down for a while. Gold and silver have broached and broken through some significant support. There's a lot of question out there right now as to their usefulness. I also am questioning the usefulness as an inflation hedge in this current environment, and wondering, have we actually gone and jumped over to the Bitcoin? Are we now seeing what a lot of people were talking about was the potential for the digital currency, move over here? No longer is gold and silver the big draw as it was in an inflationary environment. Well, let's talk about some of the things going on. And yes, thank you so much for making us the number one highest rated in the App Store. Our indicators right now in totality are the number one subscribed in the trading App Store for TradeStation. As I mentioned in the chat, the bottom line is that you have an opportunity. If you subscribe, a new subscriber will get a 4-hour training, which is pretty cool, and it is accessible to you at any given time of the day or the night, because it's virtual. You can check it out. But if you are a subscriber, normally $199 value, we will give to you for free. Send your information once you subscribe to support at TriggerCharts.com. There's a question that's coming in from Hani, and can we work out with any market? Yeah, I mean, any of the indicators we have, pretty much any market it's good for, as long as there's a price, which, that's the nature of trading, right? Volume helps as well. We have a fail-safe if there are areas of the market don't really have volume being pushed through. Like, for example, currencies don't have volume. So what we do is we push through a price-based algorithm instead. But yes, it can work pretty much with any market and on any time frame. That's the important part of it right there. Look at the time frame issue. Let's talk about the themes very quickly. The only thing I can think about this week is infants in charge. We have infants in charge, and they're like big babies. Congress and Senate. Now, last night we learned they're kicking the can down the road because they still can't make a decision on what's going on with regard to the debt ceiling, and now they're just pushing it to December 3rd. Basically, what we're having here is a lack of substance and politics taking over everything. Even though there was a general agreement, let's do this vote, it still was split on party lines in the Senate last night. Now heading over to the House, which will surely rubber stamp and then send it over to another rubber stamp to Biden's desk. It seems like, there's been a group that we have running the show, the largest business in the world, has no business experience. That's troubling. They have the inability to get anything done. They have an inability to make any decisions. And that's kind of where we're putting the opportunity, where there is a massive amount of money that they're thinking about spending, and they want us to give it to them without a plan and with experience telling us that they're very poor in how they spend it. So it's pretty crazy. Inflation. The 10-year yield top 1.57. This morning was approaching 1.6. Backed off a bit, and that's why we're seeing the kind of move up in the markets right now after this has all been released in terms of the employment numbers this morning. One of the things that I think is really important to understand right now, and it really is something from a directional and a bias standpoint, is that we still have a very, very accommodative Fed. Liquidity is plentiful. There's a lot of people that are thinking that, we can continue to move higher and higher regardless of anything, as long as we have the Fed tailwind going on. And not only that, you add that there is the potential for not only a Fed tailwind, but there is also a fiscal stimulus where we have the government that is providing incredible amounts of money. So here we are in a situation where there is now this discussion that we may see some tapering. And the Fed is talking about it. You see it all over TV. And they talked about the other day that, we're going to probably start our tapering in 2022, but end it in 2021, but end it in the second half of 2022. And you got to wonder, wait a second, does that mean that they're going to go from $120 billion of monthly bond payments, purchases, to zero in the next 6-8 months? Remember, it's called tapering for a reason. They're doing $120 billion, and what people are thinking, I think they have it wrong. They're like, well, they're going to stop the bond purchases. They just stop the quantitative easing. Oh, my God, where's the liquidity going to go? No. They're tapering. They're going from a large amount to a smaller amount. They may only go down to $80 billion a month. And that $80 billion a month will still be the amount that they were buying during the financial crisis that required basically the entire financial system to be brought back to life. So this tapering, don't get too concerned about it, because I really don't believe that the Fed is going to be cutting too much. They're going to go very slowly, maybe $10 billion a month, maybe $5 billion a month. Do it for 3 or 4 months. They'll see what happens, $30, $40 billion. Maybe into February, March, April. They'll see what happens and how that plays out, what happens to interest rate, what happens to the environment, what happens to liquidity in the market, and overall what the economy is doing. The other thing that's going on right now in inflation and yield market, which is, again, I think that's the ring that's pulling the nose right now of the mule being the markets, is supply chain versus demand. And clearly we know that the major and a massive and a historic supply chain problem that we're seeing right now. And what happens with that is that we are seeing that prices are going up, but the demand may not necessarily match. I've heard stories about people buying cars or people buying homes, or my own story about my boat and my engines. You can't get anything. It's impossible. So right now what's happening is the supply chain is a major problem, which is causing people to try to buy more. And we know that this toilet paper war is going on again. But where the big issue and where this is going to play out that we really need to be involved with from a fundamental side, not the technical, is margin pressures. So we'll see. We got our earnings in about 2 weeks, starting with JP Morgan on the 21st, I believe, followed up by Bank of America, Citigroup, et cetera, throughout that entire week, spilling over to some of the regional banks and some more of the financials on the following week. And then after that, we start getting the big boys. We start seeing the Facebooks, we start seeing the Googles, we start seeing Microsoft. All those are going to really be the big play as to how much impact there is right now on the margins. A couple of things, we're looking at what we've seen so far in terms of earnings season. And we've seen Nike and Walmart and others. They're really talking about a concerning outlook and margins. We saw what happened with their stocks. Technicals, what we talk about best here, well, charts are broken. We're seeing that charts are kind of, getting a little bit questionable. Look at the chart to the right here. I mean, we're looking at this over to the right, which is the Qs, the NASDAQ. What we're seeing is this really nice up that we had and kind of a consolidation, then a breakout. But usually you would see if it was just going to fall, we'd kind of come back to maybe where that breakout happened, but we kept on going lower. In fact, there was no support. Fortunately, at the 350 line, it was caught by just sheer force. And so what's happening here is that we get that rebound over 2 days that was pretty substantial. Right now, we're going to see a little bit of a follow-through on that as well. Bring us back up to the level of support. Currently trading, where are we trading here? 364.39, which is right at about the top end of the range right now. We drew some lines in over the last couple of weeks, said, hey, we got to make sure to hold this. If not, we got a problem. We did breach that, and that is a problem and something we looked for in this to see how weak things were. But if you look at this chart, what we have developing is a traditional head and shoulders, right? And we don't usually go over, this is kind of like, right? And then, you kind of take the range here, take this, and then we take the equivalent amount. Right back down to here. So that's your head and shoulders that played out before. They got the neckline, the head and shoulders. And what happened is, you have this situation where it's played out before it even can start. What we could do is possibly bring the shoulders down here, right? And say, this is the head over here, and this is another shoulder here. Now, that being the case, you kind of take a much longer line, 380 down to about 362, 18. So you got to take 18 from here, get 344, right? So we're talking about, somewhere over here. The next level. If you were to use the traditional style of old school, but we don't do that. No, we look at the areas of interest that are based on volume and price. And right now, I call a lot of these charts broken. And we'll get into some of that and some of the others. The other thing is we have some grinding going on, these railroad tracks going on. When I look at this and I see 1 day up, 1 day down, 1 day up, 1 day down, and almost equivalent numbers, like we saw with the Dow last week, up 300, down 300, up 500, down 500. Those are what's called grinding, and in a way I would call them railroad tracks. You got two things together going in two different directions about the same. We have sloping moving averages. Support is now resistance. All these things are telling me we have a broken situation here, and it looks like the trend is clearly towards the downside until we find another opportunity to suggest that there is a change. And we can see that on a lot of things we look at. On news, we got Merck. The announcement stomps out the vaccine companies with their oral treatment. Facebook whistleblower and outage was pretty amazing this week. And Evergrande, there's some go private, there's some people saying, hey, let's buy it now. It's cheap. And bring it back after it's pretty much bankrupt. In economics, ISM Services, ADP Employment, Consumer Credit Employment Report, all this week that came out. We saw some good numbers in the ISM Services, and that was encouraging. ADP Employment was actually pretty good. Consumer Credit was not expanding as much as it could and as it's been. And we talked about the employment report. Yes, thank you, Tex. 194. I think 194,000 added. Pretty ugly. Next week, important week. We have CPI, the inflation number, PPI, the wholesale inflation number, retail sales, and import and export prices. And we're going to take a look at some of these stocks. So let's kind of switch over. Give me a second to refresh this all. All right. So something we've been talking about is KWeb. Now, what you're looking at right here in front of you, magically, is what you get right out of the box when you get the Commander Series. We've talked about this. You get a multi-time frame on the top, which nobody else has on the TradeStation trading app platform. And somebody asked, I think somebody asked, can you use this on TradingView? I gotcha. Yeah, right now everything that we do is on TradeStation. We are talking to TradingView. As a matter of fact, I have an email with the managing partner of TradingView right now. We've been going back and forth to talk about whether or not this is something we want to do, is bring this to TradingView. Right now, it is exclusively on TradeStation. But we will look at that in the future and keep sharp to our emails. Make sure you're on the email list. So what you get is the multi-time frame. You got a 30-minute right here. You got a 60-minute here, right? 240 daily and weekly. Now you can change these around to whatever you want, with the minimum being 30 minutes. It's important to understand that the way that we calculate this is based on 30-minute bars to provide us with 60-minute and 240. So everything's a multiple of 30. So you can't have a 45-minute here, but you can have a 90-minute, right? You can have a 120-minute. And when it comes to daily and weekly, of course. Now, in addition to that, what you have here is you have color coding. I like color coding because just call me a simple guy. I like to see very quickly when I just glance at a chart, hey, it's telling me this. I don't have to go into a long drawn out. This way I can just bang through charts. So I can just kind of go, bang through charts, seeing, okay, what am I seeing? Seeing an uptrend. Oh, hey, you know what? Hold on. I want to hold on to this because I want to look at something that's going on, right? I want to look at this chart, what's going on. It very easily allows me to scrub through charts. The nice thing also is, and it's very important, and I drill this into your head every single time we talk, we always look from right to left, from right to left. Even on a chart, we always look right to left. And the reason for that is we find out where there's areas of interest, like right here, this area of interest right here. What we look for is areas that have really nothing to back them up. We have nothing in the area right here, and even going out a little bit further, right? When we kind of go all the way here, that is where you see those big moves down. It's no mystery that we saw that gap down right there because there was no support. No one was positioning themselves inside of that range. And when that's the case, we do see what we call fast moves vertically. As opposed to what we have is when you have a consolidation, which maybe I can find one here somewhere. Let's see. Yeah, consolidation, this area. Let's clear this. A consolidation area, okay? When we're looking at something that is giving us a longer and more patient move through time, through a range. Even this, even though it's below our levels, that's a move that is horizontal, which is slower. What we want is we want to capture these big moves when we can kind of draw a rectangle sideways, right? So you think about a rectangle that way, that's a horizontal move through time that's very slow plotting, oftentimes through a very narrow price range. What we want is that. We want to see that, or up or down. It doesn't matter. You can go up also, so look at it that way. We want to see that. Very simple. We want those horizontal moves through time and identify where they are. Now, KWeb, which we've been tracking for some time, which is the Crane Shares CSI China Internet ETF, obviously done very poorly with what's going on in China on the crackdown of all of the tech companies as well as everything else is going on in China. The high here was 104. It's trading about 60% off its high recently. We talked about some areas of interest when we saw that pretty much stopped dead on some support levels right here and was able to trade in and out of it throughout a few times. Right now, I'm not getting the real jam that there's anything happening here. And especially when we look at, we put on our aileron. Now, aileron's starting to turn a little bit up, but that's a one-off right now. I don't see much of a trend. I don't see really a great opportunity as when I look at this and I can simply take a rectangle tool, which is very easy to do. You just go over to the drawing bar or right click and you say drawing and I want to draw a rectangle. But here we'll take this rectangle right here and we'll say, you know what, there's a lot of interference. There's a lot of things that are happening in this range. We're seeing this right? The rectangle that's put on its side, long, slow price movement through time. That is not what we really want. So until we get above this 55 level, let's call it, really not a lot of opportunity. We may see a lot of grinding going on. mRNA, this is Myrna. This is the Moderna stock where has one of the vaccines, of course, and there's some talk back and forth about this country or that country not allowing for young people to have it. There was a correction by, I think, Sweden last night that Moderna is allowed. There was a misrepresentation or misunderstanding. Right now we have Moderna, sitting really close to support. 292 did crack below that in the after hours, come back up. And if we add on this and kind of put the radar, which is another positioning right here, really just sitting at the low end of any range. This is something when you add the aileron that the momentum really came out. This is an area where you could have said, hey, back right about here. Momentum's starting to come out. Momentum's really slowing. This is starting to turn. And then once you got below the line, the 372, it was kind of a no-brainer. This thing is going to drop. So, where are we with this? I think this is probably a much bigger discussion about what's going to happen with vaccines and boosters and all that than just the charts. But right now, the chart's not looking so good. Long-term hold, positioning in your portfolio, maybe. We'll see. This is a stock we pointed out as well. We have this really long consolidation through time. Affirm, this is the buy now, pay later, or the BNPL kind of rage and craze that's going on right now. Picked up by Amazon. When did that happen? Well, Amazon made the announcement right here. Hey, picked up by great earnings right there. And you know what else? Right here. Target's going to be using them in the buy now, pay later. There is still a lot of companies that could bring this company on. Where are we with the stock? Well, I really want to show you something here. And I want to go back a little bit because this is a recent IPO that came out. We kind of got right up to the weekly. Weekly high was about 147. We are above that right now. You see how we're above the resistance point, which is right there. It was about 129. Currently trading about 132, 133 right now. And, if we can still stay above this line, the 130, we'll call it, let's say 130, 129, I think you have a good opportunity for the potential. I mean, we have an earnings backwind, tailwind going on here, and the chart looks pretty darn good. A little choppy due to some major announcements, but we're holding a really good momentum on the upside right here. Where is it going to go from here? I mean, the range right now could be a little bit tricky depending on what happens with consumers, et cetera. But into the holiday season, you would have to think that a lot of companies are going to want to start using the buy now, pay later as a way to incentivize shoppers to come aboard. Bitcoin been on an absolute tear recently. I'm not exactly sure what was the catalyst, but whatever it may be, we marked this range, this 53 or so range, right? That was right there, 53,800. Currently trading at 54.6. We popped over 55 overnight, right? Right about there, almost 56. Came back down in the overnight. Momentum is on its side right now, and you can see I could use the indicators. Again, any time frame. I'm using daily only for training purposes. You can do 30 minutes. You could change this to, I don't know, let's go to 10 minutes. There you go, 10 minutes. You could have, utilized a very short term and got a launch right there at about 54.075, held it up to about right there where it turned orange, 55,000 point profit, and then been short from a couple different times. It went nowhere. But 55 and then covered right about there, 54.9. So 55.4, so 500 points. 1,500 points between the two right that I'm looking at just on my screen on a 10-minute basis. So any time frame works just fine. Toast, interesting. I want to share this one with you only because it's an IPO. And when we look at these IPOs, there are certain patterns that you want to play out. And it's kind of starting to get a little interesting because, when you see the IPO that comes down and then kind of bases out. So we're going to draw a couple different lines in here. I'm going to draw that and that, give or take right about there. And then starts moving back up, but then moves back up over where that kind of base is. And we're starting to form that right now. That's a good sign. Now, obviously, we're going to want to see this kind of come up. I would expect this stock to come up, level off, and then try to test it, move it beyond if there is some good momentum behind it. Something to look at from an IPO pattern, though. UNG. A lot of people like the natural gas that was in the toilet for a long time. Look at this chart. $10 to 21 since May, a double, a two-timer. And that's pretty nice, what we're seeing right there. What you're seeing right there is, this big move on natural gas due to what's going on around the world, and we're not even in the cold season yet. Natural gas down about 1.5% today. We'll see what happens here. I mean, clearly support about 1847 that I see there. We'll kind of draw that in. It's not great support, but it's okay support right there. 1855 is a support level that I would look at right there. Momentum is on your side right here, no question about that. You start getting below this 1776. There's your problem. So I'm going to kind of put that in right there, and what I'm going to do? I'm going to go and put a little problem color on there. Okay, so we know that's a problem zone. I've been talking about W, which is Wayfair, with all the shortages, all the things that are going on around the world, the potential for supply chain issues, price hikes, etc. Did actually hold itself pretty well here at the 241. Kind of back this up. You'll see a crazy chart. Now, this is what we call a consolidation during time, over time. Look at that. Look at that consolidation. Really wide, but yet there. Where do we go next? Well, the likelihood of where we go next, frankly, is down. I mean, you look at where we are right now, couldn't break above, couldn't get beyond this. So the opportunity to move down, and where to, kind of look where the trend started here, the breakout, somewhere I would call right about in this range right here is kind of 150 range. Yeah, that's low. That is low, but it was down also at $50 down in the base of the pandemic. Where are we right now? Again, it seems to be holding where we are right now, about 240s. That has been a big level. If it breaks, though, I do think that you have a little bit of movement to get beyond, and then, again, back down here. That's the pattern that I'm seeing right now, at least. I don't know if you're seeing anything different. Someone's asking me about Merck. You can put your symbols in here, too. Oh, that didn't work. Clear. Let's put what I say, Merck. MRK, obviously out with their... That didn't work either. What's happening? There we go. Merck, daily on Merck. Merck was in a long consolidation for a while, broke up, obviously gapped up to on a news item that came out. So that was really good. Where are we now? Big island right here. I think you're going to see probably a consolidation until we find out actually what this drug can do. They're talking about a 50% efficacy rate on keeping people out of hospitals or shortening hospital stay / of course, stopping death, which is major. But we'll see what happens if that passes through. RH, we talk about that as well. Same pattern as W. Edit, I thought this was kind of an interesting stock. Dropped all the way down to some decent support. Starting to see a little bit of a divergence to the upside here. I would keep an eye on this. Nice base right there on support, and has a couple of days that have been good over the time. Tesla, well, reaching to the stars right here. Netflix, another one. Really good looking chart. We own that one. SLV, see, we had 2601 buy point. It just can't get there. Just can't get there. And USO looking to continue its upward movement, 5574, which means it will be above the high that we've seen. So this move from 18 to 55, and not on the fact that we need more oil, just on the fact that OPEC is playing games, is really pretty amazing. I like to look also, as you know, at what's going on. Like, for example, the KRI. KRI is right in the middle. It's important to read what this says. The overall market, as measured by the KRI algorithm, is currently not overheated or oversold. The market is currently in equilibrium, meaning that the current short-term trend should continue. Now, what is the short-term trend? I don't think there's any question. It's a downtrend, right? That's a downtrend. We can see that it's not. It doesn't take rocket science, right, to look at this and say, okay, well, you know what, we're kind of in a downtrend here. Now, we did break that a little bit right there on the upside, but really, if we really want to drive the total downtrend, it was somewhere right about there, and we kind of stopped at the bottom. And okay, so when you look at this, what's happening here is that we have to look at the discussion right there that's telling us that the movement stays as it is. The other thing you want to look at, of course, is movers on a regular basis. You can set this up and see what's moving on a daily basis. Those are the hot trades that will probably be there for scalping, for day trading, etc. Anyway, thank you so much for joining me. We're going to end it right there. Have a great day and make some money. I'll see you again next week.